Hello everyone. Just another catch up, see how we're getting on with this week with the market, etc. etc. Just start with last week of what I was thinking about and looking at, which sometimes the downside of these outlooks, basically the market continues to surprise me basically. So these are the three scenarios that I laid out. I could have done some more, but I thought we had more downside potential than upside potential, and I should have considered that we should basically, if we really look from here, this is what I still not got my head around this. I think that's part of the problem. This I thought was, we had a load of compression in here. We've had a big run up in 2024, big run up, and a big pullback here. I didn't think it was the end. I didn't think this was an anomaly. I thought this was the potential beginning, with numbers starting to, economic numbers across the world, not necessarily in the States, starting to weaken, and Trump with the tariffs and Liberation Day stuff, etc., etc. The bears were around here, right? They were just getting going around this point. The volume was there, etc., etc. But ever since this point here, the bears have just not shown up once. So it's been more than 2 months, and we just have not seen them at all. And we're basically just floated back to the all-time high. So I've struggled, I think, to get myself out of this mindset. So this is more of a trading prep, but also just a reflection. I've just, through this whole period here, and I think it was a great lesson, I've just struggled to get my head around the bears are not around, right? So at this point of here, I was like, I think we'll probably reject off there. That's my most likely thesis. That's what I'm going for. I'm like, okay, that didn't happen. Things flowed up a bit more. I was like, okay, we'll probably find resistance around here and probably reject off the SMA like we did here. Okay, we get to that point, and I'm like, maybe it's starting around here. Bonk. I was like, okay, that's, driven by some news, very newsy driven with tariff deals, that sort of stuff, etc., etc. But then still remembering that there's still a base layer of tariffs at 10% during most of this when this is happening. So again, the bears haven't appeared here once. And at this point around here, I was like, okay, I want to see this level tested and what happens. So I think I had some light bullish trades in here, but very small positions. We get the pullback. Excellent. How does it test? And I didn't think it would smash through it, but I was like, how does it test it? What does it look like? Okay, we get a small test. And again, I wouldn't call this bears getting involved, but then straight away, look at that. Nice bullish hammer. Boink. Straight up. Real nice. And then we just continue to float, and then we get to that level here, and we just float on by. Float, continue to floating. And then in here, I thought, okay, maybe we'll see, a test of maybe this level again, maybe see something going on, because we seem to be drifting slightly. So there's not much conviction from the bulls, but there's definitely nothing from the bears. So either side is kind of like, but the bulls are there more than the bears. And with approaching the all-time high, it just seems weird, odd to me to float from there, 485, and you're basically just floated all the way back up to the all-time high without being tested at all. So where are the bears? Not here. They're not here. But during this whole process here, I've always started with the point of neutral to bearish. What else happens? And I've been able to take some long trades because I've tried to shift my mind out of this bear, perma bear almost mindset that I feel like I've inhabited slightly and just worked maybe slightly against me, because I keep saying to myself, I'm saying it, but I just don't think I'm actually thinking it, which is trade what you see, not what you think. And it's difficult to swing trade through this, fair enough. I think that's totally understandable. You struggle to swing trade through it, holding over days into the weeks. But if you get this float, day trading into at least holding overnight positions, so if you've got a credit debit spread or something on like that, or just some shares you're holding long, you can float into here into a day or two, especially around, after this test here. In here you potentially can get some of that and just float it. higher, and you might take 2 or 3 trades, closing them relatively promptly. But then we get to here where, okay, I'm expecting a test of something, and there's just nothing, right? Newsy driven and not exactly fantastic news, but we just end up gapping up, gap, and past the all-time high. So we're on it. I don't think this is the end of it. You can kind of see what happens here. You make an all-time high, and then you drift off that, then you come back to it again. Look at this, gappy, hits it, but then stops, stutters, rejects, starts again, stops, starts, rejects. So I expect this level to be tested. That's what I'm expecting this week. Could it continue to float higher? I think it's unlikely, just because I very much see this 8 EMA that I have on here. I very much see that as elastic band, and there's only so far the market can gap up and before it snaps back. So even if you look at distance between the 8 EMA, if you go through charts and look at it, you always see eventually, so this is on the downside, but eventually you snap back. You always, it's like a magnet. There's only so far that you can snap away from it, snap back. It doesn't mean you're bearish at that point, it's just a snapping back, because you can't have a market that keeps gapping up forever. Same thing here. This is, I think, Trump election kind of stuff. Gap up here, but eventually, and again, this is not bearish, it's just going to take some profit and we're going to snap back to those EMAs again. So that's, I think, where we're getting close to here. Maybe there's another one Monday, potentially. But the overall reflection I've been having is just finding it difficult just to shift mindsets. I've actually made more money this month than I have in previous months. My win rate is really good. Profit factor, really good. But it's the process I think I'm not particularly happy with. So these are just my trades for this month. So I've not traded a huge amount, to be honest. But you can see I have been going, I guess, mostly long this month. And most people will be happy with this because I'm mostly trading just 1 share, 2 shares, because I'm trying to build up knowledge. So I've done a couple of options trades to get used to them, to see what they're like, etc. But taking profit relatively kind of quickly. You can see here, McDonald's I could have held much longer. A lot of these positions I could have held a little bit longer. Hut was a longer term one as well, but sold out a bit too early. And I'm selling out these long positions a bit too early because I just don't have that conviction. I think that's what I'm struggling with. I've still got an open eBay bearish position. But yeah, just leaving money on the table. And fair enough, I appreciate, like I was saying, it's difficult to hold longer swings in here. But it's the process I think I'm not particularly happy with. So the profit factor can be good. There isn't much of a profit factor when you've got 100% of trades doing well this month. But yeah, it's the process that I'm not particularly happy with, I think. And part of the reflections I've been thinking about and writing about a lot is, how to stick to your kind of game plan and stop getting, I guess, blown around by the wind of mental stress, mental whatever that's going on. And part of the problem I acknowledge I've been having is you only have a certain amount of mental capital to spend a day. And pretty much most of us are not full-time trading. We have full-time jobs, and I have a full-time job. I have a wife as well. So the way I looked at it was, I was trying to do some prep the night before. Not great at getting up in the mornings because I start at 8. My work starts at 8 a.m. GMT, and the market opens 2 p.m. GMT for me. So I'm at work at that point. So by the time I get home, I've used like 60-70% of my mental capacity. My discipline, my patience is very much depleted by the time I kind of get home. And then you've got to spare a little bit for your wife, a little bit for whatever else is going on. You've got to do dinner, you've got to all these other bits that you've got to do. So I've been thinking about how can I front load my mental capital and thinking. So, and as that is just doing more prep. So I want to basically prevent unplanned trading decisions. How to reduce the trading decisions that I have to make on a day-to-day basis. And because if you look at a trade, so if I was looking at Crowd, for example, that I took, or even McDonald's actually, because I was saying I sold out of that one quite early. So let me just get back. So I took McDonald's on June 17th. Okay, so where's June 17th? So I took it in here, right? And I very much lean on the daily chart. So that is my exclusive kind of trading aspect that I like. So my thesis was, here's the 17th in the market around here, that we're probably going to drift lower, right? So at this point, this has not happened. So the most likely scenario is we're probably going to maybe drift down and test some levels. There's news bits, something with Trump, all this other stuff going on as well. Appreciate that. But there's nothing in here to say I should have exited, right? And I identified McDonald's pretty well. Really like this breakdown through that 200 SMA, above average volume, and we got continuation the next day. Perfect. I like that. That's really nice. But then because it was I'd not done enough planning for that trade, I had to think about it more and I had to think about it on the day. And I was kind of rushing around trying to do other stuff. But look at that price action since then. Nothing in here to say, oh, maybe you should take profit in here. There ain't nothing. There is nothing in here at all. Even the 21 moving average that I have sometimes if it breaks above that, then I can sell that, which I do use, right? But because this wasn't planned, and I could have held it all the way down to here. And here we break through that SMA and maybe you can exit there. That's perfectly reasonable. We don't want to hold too long because of what's going on in the market. And we know, come this day, the market's actually almost turning back bullish again. You're like, for Christ's sake. So, you could take profit in here. If not, this gap up here, you're like, okay, the gap hasn't reversed. I can take profit here, which is, fine. It was a debit spread as well. So it's a put debit spread. But it's having to make decisions, unplanned decisions, is causing me problems. That's what I've kind of reflected upon this weekend. I wanted to put it into a video for myself to refer back to. So I've tried to write myself. I can actually get up early in the morning to do that mental prep, because that's when you have the mental capacity. It's different for everyone, but to have that mental capacity to do the prep work. So I'm trying to do as much prep work now as I possibly can. Crowd was an example of a trade that was unplanned. I liked it because it was breaking out, right? This is a nice breakout. Well, initially it was, shall I say. So if we look at Crowd, I took it on the 25th. Way too early was my analysis of this, but I took it on the 25th. Did I take it on the 25th? I thought it was not the 25th. 25th, 11. No, I know I exited on. I don't think that's right. It's saying I entered at 11:30. I'm definitely sure I did not. I remember distinctly that I entered around here, which is the 24th. So I entered down here, basically. I put in an order. It filled when I was not expecting it to fill. But the breakout hadn't really occurred. Actually, I can't even remember where it really was. But anyway, the breakout was happening. Alerts were triggered. And I rode this position up quite nicely. But again, because it was unplanned and I just didn't have the time to think about it as much as I would have done, say today, being like, so if I was taking this trade now, I would say, okay, I would see the stock and maybe set an alert here and say, okay, if we break this earnings candle and this compression that we've kind of hit off here a couple of times, then we could So we want to see that breakout. We want to see it hold. We want to see it then tested. But then we get the breakout. So that's nice. So I would potentially buy one right there. If the volume was good and the price action was good and we showed relative strength, that's the first tick box, which it did, right? Relative strength here in green. Nice. Really nice. But what I would have set out is to say, looking at the options that I had, the expiry, I took a shitty expiry for this. I should have taken next week's expiry, but ended up going a bit too far, or even the week of expiry. Because you want, this is a credit debit spread, you want the decay of that short position that you have. So selling the call, you want that to decay as fast as possible. So if you have an option, if you sell that and it's much further out, it's going to cost you, it's not going to decay as fast as you would. And your position, because it's in the money, would do better as well. So I left a lot of money on the table. There was just lots of mistakes, and that's what seems to be happening to me, is because I'm also bearish. Back to that thing of being bearish all the time. It's just not messing with my head a little bit when I'm trading, and with reduced mental capital, that's what's making it challenging. But that's mostly what I had for the video. I'm not going to do my scenario pieces I usually do, because I'm just trying to reflect on this, about what particular issue I'm running into, and I'm just finding, I think I need to do so much more prep, because I just get overwhelmed that when I come in, 5 p.m. on Monday, got lots of things, alerts that are triggering. My alerts get out of hand. I kind of trying to look at the market and then power through my alerts to see what's triggered. My pool of what I'm looking at almost gets a bit too much. And then, maybe you don't take anything Monday or Tuesday because you maybe missed some moves. And then you feel pressured, right? You feel pressured to be like, I'm supposed to be trading here. And, you don't want to trade non-A plus setups. You want to trade those A plus setups and be patient. But it's just, difficult to do so. So I think we're going to see this all-time high tested. And where it sits from there is what's going to be really important. So we're going to see that level tested. And even if we gap up again, I think I've mentioned that. So we want to see the degree of how it comes down. Is it going to be a nice pullback like this, kind of like this, to a nice technical level, and then we kind of start going up again? Okay, fine, we'll stick long, whatever. If that happens, I will probably trade the downside on the way back. Again, keep it short, snappy, because the bears aren't here. They're not here. We've seen no evidence of them appearing. I keep waiting for them to appear, but they're not appearing. So if we look at some events, again, we're still looking for catalysts. I've been saying this for ages. I'm looking for catalysts for what will drive us a specific direction. Because most of the time we've been floating up, kind of up high. Trump was talking about Canada and stopping talks with Canada. Don't know. So newsy driven. But I think maybe a lot of people, what we're waiting on, what I'm waiting on, is how does stuff with what Powell and interest rates and unemployment numbers start to do. So let's just have a quick look at last week quickly. But PCE, which is the Fed's favorite metric for measuring inflation, ticked up slightly, but probably within range, most likely. Unemployment numbers came out good. The final GDP number did not come out good, so more negative than we thought. But I just don't think there's enough info there for the Fed or even us to gauge, yep, that's definitely going to take us that particular way. So Mr. Powell is speaking. Manufacturing, we know, is in contraction territory. So JOLTS might be quite interesting. So I think JOLTS, ADP, farm numbers, I think all these numbers here actually are pretty important, because if we are starting to see some contraction in the economy, this is where we're going to see it. We're going to see employment changes, JOLTS job openings as well. And it'll be interesting to see what ISM services come in, because they were surprisingly hit contraction territory, last number that came in. Which was interesting. So I think it's just keeping an eye on those events, what kind of catalysts we have. I still think you have to keep positions short and snappy. 2 days, 3 days, day trading. I think still got to keep them that way. But still waiting for that catalyst. Are we going to start seeing weakening numbers? Yeah, I've got lots of picks. I might make a separate video with maybe some picks I'm looking at this week, but this one is kind of stretching on. I just wanted to talk about my reflections and trying to build myself, I guess, a pre-trading ritual and putting it into words. It helps me do that, as I'll start to work on that in the next couple of weeks to try and get myself set much before the market and not to be blown around with what's happening, and kind of have some set stocks that we're watching and waiting for those positions to set up nicely, which is good to do when you're on a Saturday or Sunday when you're much more relaxed. So I think that's it. Yeah, from me, I might look to update on how that's going and how that affects my trading going forwards. Yeah, that's it from me.